The ASX just had its worst week in 3 weeks. Wall Street's Nasdaq dropped 4% in a single day. So what's actually going on, and what does it mean for everyday Aussie investors? Hey, I'm Ryan from Reinvested, where we make money simple for young Australians. Today, we're doing a quick market update on what's happening right now on the ASX and Wall Street. There's a lot going on, and most of it actually makes sense once someone explains it properly. Quick note, this is general education only, not financial advice. Always speak to a professional before making investment decisions. So first, the Australian share market. The ASX 200, which tracks our top 200 companies, closed last Friday at around 8,625 points. That's down about 1.2% for the week. Now, that doesn't sound like a lot, but the two sectors dragging it down are really important ones for Australia. So materials, think mining companies like BHP and South32, they've been hit hard because iron ore has dropped about $112 a tonne down to $102 over the past month. That's weaker demand from China combined with more supply coming onto the market. And financials, your big banks, they're also under a fair amount of pressure. Their cautious commentary around the housing market and the market still trying to figure out what the RBA is going to do with interest rates. Those two sectors, materials and financials, make up more than half of the entire ASX. So when they sneeze, the whole market index catches a cold. Now over in the US, things got pretty dramatic last Friday. The Nasdaq, which is quite tech heavy, think Apple, Nvidia, Microsoft, dropped 4% in a single day. That's the biggest single day fall since the tariff chaos back in April 2025. So what triggered it? A couple of things. Broadcom, a big chip company, disappointed investors by not raising its AI outlook. That spooked the whole tech sector. Then a really strong US jobs report came out, which sounds like good news, but in markets, strong jobs data means that the US Federal Reserve is less likely to cut interest rates. And higher rates for longer are bad for growth stocks. So you had a tech sell-off plus high interest rate fears hitting at the same time, which is a recipe for a rough day. The S&P 500, the broader US index, finished the day down 2.6%, sitting at around 7,383 points. So what does any of this actually mean for you as an Australian investor? A few things worth knowing. Number one, the market pullbacks are normal. The ASX is still up 1.28% compared to a year ago. So definitely zooming out matters with that. Number two, if you invest in an ETF that tracks, say, the ASX 200, you're exposed to a lot of materials and financials. That's not bad. It's just worth understanding what you actually own when it comes to that index. Number three, what happens on Wall Street doesn't stay on Wall Street. Our markets tend to follow the US, and especially in the tech sector. It's a global system. And number four, if the RBA hikes rates again later this year, expect more pressure on both property and shares. That's the environment that we're in right now. If you want to understand how all of this connects, interest rates, shares, property, your super, that's exactly what this channel is for. Follow Reinvested for more no jargon financial content made for young Australians. And if you own an investment property, check out CostBase. The link's in my bio. It helps you track your property costs so you pay less capital gains tax when it comes time to selling. I'll catch you in the next video.